Hello friends, welcome to my channel. Festive wishes to you all for the new year, for Pongal, Lohri, Sankranti. This year has started quite well for the stock market. Our portfolios are also doing pretty well. This video is going to be interesting in two ways. The first thing is we are covering a new sector which is broking and wealth management, and in this sector we are covering a small cap company. So if you're new to the channel, please do subscribe and hit the bell icon and follow me on different social media handles as well. Let's get started. So the company which we are covering today in our analysis is Share India Securities. It's a small cap company into broking, mutual funds, insurance, NBFC lending and various other financial services. The stock has given excellent returns in the last 1 year, and that is why this company has come to limelight. Although the stock has given a big run up recently, that doesn't mean that this company, the stock cannot give a decent return in future. So let's study, analyze and keep tracking this company, and whenever we get an opportunity we can take a small position and expect decent returns as the company keeps performing in terms of results. So Share India Securities is a fast growing financial services company. It offers various services to its clients like broking, depository, insurance, lending in the form of an NBFC, wealth management like PMS. The company tries to render personalized services as they have physical branches in various cities and states of India. They try to maintain one-on-one relations with their clients, and that's how the clients stick to companies like Share India Securities, even though there are a lot of new broking companies into the market. So they started business in 1993. Earlier the promoters were different, and later the company got taken over by the Gupta family. We'll see the history of the company going further. The company is transforming itself from a traditional broking firm to a fintech company. They have presence in 28 states in India, 733 branches. They are into this business for more than 27 years, and they have 1500 plus employees in the company and 16,000 plus clients. So although it's a small cap company, it has decent number of clients and a wide presence across India. Various businesses of this company are done through its various subsidiaries, like the NBFC business is done through a subsidiary called Share India FinCap Private Limited. One thing you can observe that all these subsidiaries are wholly owned subsidiaries. Insurance broking is done through Share India Insurance Brokers, equity broking through Share India Securities IFSC Private Limited, investment banking through Share India Capital Services, equity trading is done through Share India Global PT and Total Commodities. They have recently acquired a couple of new companies which are Agarwal Trading Technologies and U-Trade Solutions. Global equity trading is done through Total Securities Overseas Limited, and equity broking is done through Total Securities IFSC Private Limited. So these are the various subsidiaries through which the company does its various business services. Let's talk about the management. The chairman and managing director of the company is Mr. Parveen Gupta. He's the promoter of the company and he has 28 years of experience in financial services, and he is one of the key players in the company's growth until now. The joint managing director is Mr. Kamlesh V. Shah. He has 25 years of experience and he is majorly knowledgeable and managing the legal part of the business. He has wide knowledge in the legal, regulatory compliance and risk management, as he is a chartered accountant and is certified NICM, NCFM and MCCP. The CEO of the company is Mr. Sachin Gupta. He joined the company in 2003 and he looks after the day-to-day operations, strategy and marketing of the company. Now let's see the history of the company. The company started as a private limited company in 1994 called FMS Securities. At that time the promoters were different. They were Kumbat family, and later in 2000 the ownership got transferred to the Gupta family, and in the same year 2000 they took a membership of BSE. And during the period from 2007 to 8, they got registered in the futures and options segment in BSE and also the currency derivative segment in BSE. So during this phase of 2007-8, they ventured into the F&O and the currency segment. Then in 2010, Share India Securities business was amalgamated to FMS Security, and the name of the company was changed to Share India Securities Limited. And during 2011 to 12, they registered with NSE, MCX and United Stock Exchange of India. In 2013 to 15, they started the cash and F&O segment of MCX, as well as they got a depository participant registration done to CDSL. 2016, they got registered as a mutual fund advisor, and in 2017, they brought their IPO through the BSE SME platform. And they also got registered as a research analyst with SEBI. Just to explain in brief, there is a SME segment through which the companies can get listed in NSE and BSE. So the listing process is quite simpler, as it is for small companies and later after 3 years there are certain terms and conditions which if those terms and conditions are met, then those companies get transferred to the main board, and there the trading happens just like normal any other companies. Until then also trading happens normally, but it is in the form of lots. Segment wise, if you see, majority of their revenue, about 95% of the revenue comes from the broking business, and about 4.3 from NBFC, and other businesses, the insurance and the mutual fund business and the wealth management businesses are still at the growing stage. Now let's talk about their business model in detail. Broadly, if you see, their businesses can be classified into broking and depository, merchant banking, NBFC, mutual funds, and insurance. So in this 5 segments in detail, if we see, in broking, they have equity broking, derivatives, commodities, currency trading, and depository services. So all these are self-explanatory, as all of us are trading daily into the market, so we understand these terms, and that's why we need not get into much detail. In merchant banking, they are registered as category 1 merchant banker, and in merchant banking services, they render services like managing the IPOs of various companies, rights issues, qualified institutional placements, bulk and block deals, P funding, pre-IPO placements. If someone wants to get valuation done, they do the valuation advisory. If the companies want to do open offers, buybacks and things, these people get it done on the company's behalf, and they advise them how to do it. And they also do the mergers and acquisitions part. In their NBFC business, which is done through the subsidiary Share India FinCap Private Limited, they give loans which are against shares or commodities, business loans, small and medium enterprises loans, micro loans, and personal loans. Under mutual funds, they are registered as mutual fund distributors, so they do the mutual funds and IPOs. In their insurance segment, which is done through a subsidiary Share India Insurance Brokers Private Limited, they have a registration with IRDAI for insurance broking. And insurance, they provide various private insurance as well as corporate insurances. In private insurance, they provide term insurance, endowment, ULIP, retirement plans, various health, motor insurance, etc. And in terms of corporate insurance, they provide group insurance, scheme marriage general, personal insurance, gratuity, superannuation. So like this, all the insurance products which we generally use, they are also providing them with their tie-ups with different insurance companies. Under wealth management, they do provide portfolio management services, and they, if their clients wants to invest in various asset classes like debt funds, mutual funds, bonds, or any other asset class, they provide those consulting and wealth management services. Now, interestingly, this company is focusing a lot on the algo trading business. They recently acquired a couple of companies to develop products for their clients, which are technology products, which will help their clients to do trading in the form of algos. So the clients will have their own strategies. Without knowing the code, the clients will be able to deploy those strategies in their apps, which is developed by these companies, and the app will trade on behalf of their client as and when the criteria are met and the triggers are created by the market fluctuations. So these are the companies which are acquired by Share India Securities recently. First one is Algowire Technologies. This company is an analytics and consulting firm. They have clients like trading houses, banks, hedge funds, financial institutions. It's a global company having presence in India, US, and Europe. The company is led and advised by wise minds from IIT, ISB, and IIM graduates, and they have a team of 20 plus people working with them. The next company which they have acquired is U-Trade Solutions. It's a company which has more than 100 people working with them and 50 plus clients, which includes large banks, stock exchanges, hedge funds, brokers. They have presence in 15 plus countries, and this company is trying to develop first of its kind algo trading platform serving and targeting more than 30 million people in India. So with the help of these two acquisitions, the company will transform itself from a traditional broking company to a tech-enabled fintech company, and they will develop different platforms which will help their clients to trade easily as well as using techniques like algo trading. Now let's understand how the industry is heading. As of now, customers in the broking industry need the best technology. They need a very good user interface which is easy to use, as well as they need a robust technology wherein there is no downtime in their trading platform. The government is also promoting the financial services sector through various incentives and policy schemes, like they have enabled the debt ETF these days. They are trying to keep much liquidity in the market. They have simplified the IPO process, and due to the rising income of different people, the people are more aware and they want to invest in the equity markets. By 2028, India is going to become the 4th largest private wealth market globally. The equity turnover in the Indian markets in FY21 rose by 46% more than previous year. So now you can see that the participation in the Indian equity markets has increased drastically when compared to the previous year, and this is expected to continue in the near future also. Average daily turnover in the Indian market is growing by leaps and bounds. In 2015-16, in terms of million, if we see, we did 26,24,527 per day. But in 2021, it's almost 10 times. You can see it's about 2 crore 58 lakhs 48,116. So there is a drastic increase in the average daily turnover in the Indian equity market, and demat accounts have gone up substantially. In financial year 12, we had just about 20 million demat accounts, and now we have crossed more than 50 million demat accounts in India. The total AUM of mutual funds stood at about 32.17 trillion rupees, and there was a record high SIP flow in the month of March 2021, which was 91,820 million. Out of this, 38% was through SIP. That means a majority of people are doing SIP. So when people do SIP, they generally have a long-term vision, and the SIPs continue for a long period of time. In the NBFC sector, if you have observed, there are a lot of fintech companies coming. So there's rapid use of technology in the NBFC sector. The NBFC sector has grown at a CAGR of 19% in the last 10 years. Now, as you know, there's a stiff competition in the broking industry in India, and the company has to compete with major companies in India like Angel One, Zerodha, Upstox, ICICI Securities, IIFL, Anand Rathi, Edelweiss, Motilal Oswal. And there are also a lot of unlisted, unorganized players which the company has to compete with. But there is consolidation going on in the industry, and there is a high chance that although Share India Securities is small right now, but as and when the company grows, there is sufficient cash flow in the company, and the company may look at acquiring smaller companies and go for inorganic expansion. So no matter whatever product this company develops, there is going to be stiff competition from other players, as well as they are also providing robust tech platforms to their clients. This company is giving special focus to their HNI clients, and that is how they are able to grow faster. To their major clients, they are offering customized tech solutions. They are developing a strong in-house technology team. As the industry is consolidating, this company is looking at inorganic acquisitions. The people who are managing the company have been into the financial services market for more than 25 years, so they have a wide experience. And the company is offering a complete solution to their clients in terms of wealth management, insurance, broking, and all the other financial services. As of now, we cannot say that the company is having a very strong moat, but since the industry is growing pretty fast, the size of the cake or the market size will become huge, and there will be enough tailwinds for everyone to grow in the industry, at least for the next few years. Now let's see some facts and figures to understand the size of operations of this company. In Q2 FY22, the number of trades were 371 million, and in F&O, the average daily turnover was 58 billion. In commodity, the average daily trading turnover was 17 billion, and in cash segment, it was 14 billion. So in their broking business, the company has a decent size of operations. In mutual funds, they just have about 1.6 billion AUM. Insurance, they have 10.6 million insurance premium received in H1 FY22, and they have covered just about 5,500 people under the insurance policies. PFC loan book is just about 1.06 billion. So their broking business is of a decent size, but their other businesses are still at a nascent stage. Their broking average daily turnover, if you see, compare with the earlier year, the same quarter, in cash, it has grown from 14 to 15 billion rupees. In F&O, it has grown from 39 to 58 billion rupees. In currency, it has grown from 11 to 12 billion rupees. And in commodities, it has grown from 11 to 17 billion rupees. Year on year, there has been a substantial growth in the average daily turnover in the broking business. The broking yields, if you observe, have also substantially risen from about 0.43% in FY18 to 1.37% in FY22. Now in this slide, you will understand the size of operations of this company. In NSE cash segment, they have a market share of about 2.2%. In NSE futures, they have a market share of 3.6%. In NSE options, they have about 8.8%, BSE cash segment 1%, NSE currency futures about 4.2%, currency options about 10%, and commodity they have greater than 5%. They have a decent size in all the segments, but especially in the options segment, they have a larger market size. So although it's a small cap company, but in terms of market share, it has a decent market share. What is the growth outlook of the company going further? So the company is transforming itself from a traditional broker, which used to run out of only 1:1 client relationships. They are transforming themselves into a tech-enabled platform. The tech-enabled platform will focus more on the retail investors, and the company will keep developing new platforms like the algo trading platform. The company will focus on providing better experience to the people using their tech platforms, and they will keep diversifying their product offerings to increase the targeted market size. In the insurance sector also, the company is focusing on developing a platform specifically for their insurance clients. In their lending business also, they are developing a fintech platform which will take lending decisions based on machine learning, at least for the smaller clients. The company is giving a growth guidance of growing at a CAGR of about 30% for the next few years, which is very impressive. Segment wise, if we try to understand, their client turnover in cash market is up by 63% year on year, futures is up by 28% year on year, and options is up by 279% year on year. In NBFC, their loan book has grown by 26% to 781 million, and the net interest income has touched about 76 million. In insurance broking, as per the latest quarter, they have a total premium receipts of about 186 million now, and they are covering about 22,955 lives. The mutual fund AUM has grown by 45% from 1.1 billion to 1.6 billion. Now, what are the risks this company might face? The economic, political, and regulatory risks, as this company has to, or the industry has to comply with various regulations. Business risk, as this business can be slightly cyclical, as the market, when the market does well, there is a flood of new investors into the market, but when the markets don't do well for a long period of times, then new people will resist to enter into the market. Operations risk, as the company has to deliver whatever promises they have done to their clients in terms of technology as well as various service offerings. And credit risk, as the company is also into the lending business. Now coming to the financials part, let's start with the quarterly results of Q2 FY22. In terms of revenue, the company has done a revenue of 213 crores compared to 82 crores previous year. EBITDA is about 69 crores compared to 24 crores. Profit after tax is 43 crores compared to 14 crores previous year. Margins have grown from 29% to 32% in terms of EBITDA and 17% to 20% in profit after tax. So the Q2 performance has been very good. Coming to the yearly performances, comparing the last 5 years, the revenue has grown at a CAGR of 43% in the last 5 years, from 110 crores in FY17 to 453 crores in FY21. EBITDA has grown at a CAGR of 67% from 17 crores in FY17 to 132 crores in FY21. Profit after tax has grown at a CAGR of 78% from 8 crores in FY17 to 81 crores in FY21. The PAT margins have improved from 7.2% in FY17 to 17.9% in FY21. The share capital is about 32 crores. It was increased from 24 to 32 crores because of amalgamation of one of their subsidiaries in FY20, which is Total Securities. Reserves have been steadily growing and they have reserves of about 248 crores in FY21. They have a debt equity ratio of 0.37 in FY21 and borrowings of about 119 crores in FY21. The borrowings may substantially increase going further as the company will focus on growing their NBFC business. The liquidity position is good. They have cash equivalents of about 300 crores on balance sheet. ROC is also improved from 28% in FY17 to close to 36% in FY21. Company has been generating good operating cash flows. They have risen from 14 crores in FY17 to 245 crores in FY21. ROE is about 34%. The company is a dividend paying company. Remuneration to executive directors is about 1 crore. And the auditors of the company are SVP and associates. So the fundamentals of the company are good, and going further, we should keenly watch whether the present margins and the present growth performance sustains or not. Let's check the shareholdings. The promoters hold about 55.5% in the company and public holds about 43.8%. There are not much institutional investments. It's just about 0.6% in the FIIs. The promoters have pledged close to 4% of their shares, which we generally consider as a negative point. Let's check the valuations. The last trade price is about 1152. 52-week high and low is 164 to 1245. So in the last 1 year, the stock has given a massive 500% returns to the shareholders. Last 3 years CAGR is about 141%. The market cap, in spite of such a big run, comes to just about 3674 crores. It's a face value 10 share and EPS is about 41 rupees. PE comes to 27. Industry PE on an average comes to 20, and the median PE of this company in the last 3 years comes to about 24. Book value is 158, which makes the PB ratio is 8.39, and market cap to sales is about 6.42. So in terms of valuations, the valuations are expensive as of now. Let's look at this price chart. The stock has strong supports at the level of 930 and 725. So if you're convinced with the financials and the business model of the company, this is the range in which you can start accumulating the shares. So this is about Share India Securities. To summarize, the company has decent fundamentals. The promoters have good experience in the field of share broking and financial services. The company is transforming itself from a traditional broking company to a fintech company. As you know, the industry is experiencing extreme tailwinds with the number of people entering into the financial market. The company has shown robust growth in the last 5 to 10 years. Fundamentally, the financials are decent. They are offering wide variety of services, although other than broking, the other services are at the nascent stage. They will have to face stiff competition from various players, big and small, in the country. The industry could be cyclical, as when the market is performing well, there will be increase in the number of investors as well as the increase in the volumes. But when the markets don't do well, there could be a decline in both. Companies coming up with new tech products, and so the success of the company will depend on the success of the products which the company is developing. It's a small cap company, so you have to be very careful while investing in such companies. And in terms of valuation, at the present rate, currently the stock is overvalued, so you should consider accumulating it at reasonable valuations. Although the company doesn't have a strong moat, it's going to face stiff competition from other players in the industry, but the fundamentals are good and the company is delivering rapid growth in the recent years. So whenever such stocks are available at a bargain or a reasonable valuation, you can consider accumulating, as the industry itself is growing pretty fast. So this is about Share India Securities. I hope you like the analysis. If you like, hit the like button and subscribe to the channel. You can join a Telegram channel for daily market updates. And if you want me to make a video on your favorite company, you can leave that company's name in the comments below. Thank you for watching and have a wonderful day.